What's good, everybody? I know it's been a while since done one of these. Uh, I told everybody I was going to do it last week in the group. So what this is going to be is the Euro Australian dollar markups that some of us were fortunate enough to grab going back last week and the previous week. It actually provided some really good setups. So what I'd like to do is essentially run everybody through the setups that we were able to take here. So this is Euro Australian dollar. Actually, here, hold on. Let me get out of night mode. There we go. So this is Euro Australian dollar. All right. And what I'm going to do is I'm going to walk you guys through exactly how I saw it, what I wanted to see happen, and ultimately gave me the confidence to take these trades. Right. So from a top-down analysis, right, we can come over here, and obviously COVID created this massive push up over here. Let's switch this over to red. Maybe that'll work better. So if we know that this was the massive push up, what was the previous high? Previous high was right here. So when we broke that, that was the new high, which meant this was the low that ultimately created that. Okay. Clearly we could see a really nice accumulation in here. So ultimately, when we broke this, we broke higher time frame structure to the downside. And in reality, it's going to be a very long time before we break structure to this side, right? I mean, we're not going to be doing that for a very long time, and we're talking that's roughly, let's see, I mean, it is roughly 4,000 pips. So something that I potentially will not see us do. Okay. Now, what I do want to see, right, is if we go over to the intraday, okay, where we can see price ultimately, we had this high up here. Here was the previous low. So this is essentially our intraday leg that I was looking at. Okay. Now, from a comparative analysis standpoint, Euro NZD, which is the comparable instrument that I use for Euro Australian dollar, in that case, we had already broken structure, right? This here, this push had broken structure to the upside, and what I mean by that is, if we come over to Euro NZD, right, we can see that from a market cycle perspective, we had ultimately a redistribution, and then pop. So out of that, this was that intraday break of structure, where on Euro Australian dollar, we did not, right? We did not. So this key area here was a very key area of supply for me. It was the cause of that last push. And right around like May, here's May right here. So right in this time period is where I started to become interested in Euro Australian dollar. If you guys go back into some of the videos on YouTube back in May, I had talked about this. And the reason I talked about it is when we look at what happened, right, we can see clearly an accumulation down here. Another accumulation here. We ultimately had a, distribution with what, a reaccumulation, multiple accumulations, another distribution up here with what, another accumulation. The one thing, the constant that I can see happening here, market intentions, right? We could see that the distribution or the supply side, what is getting invalidated, right? Distributions, even coming up into this price action up here, it had a massive distribution that did make a low, right? But why wasn't I looking at price to come into that area and really sell off? Well, because if we look at what happened here, we had a distro. That distro did what? That distro had a creek. Okay. Ultimately, we had an accumulation here, right? Here's your trading range. Okay. You had your 1, 2, 3 drives, your spring, and a break of structure. Okay. So out of this price action, this is ultimately the new high, right? Well, what caused that new high? It was coming out of this accumulation, right? This spring is what I wanted to see price eventually come back into. We didn't get that, right? We didn't get that in May. But what we did see was this reaccumulation. And if we understand that reaccumulations are continuation moves in the market cycle, right? What we know is that this is an area of demand. This is an area of demand. So when price had back in late May, early June, when price had this distribution, right? And what we had here was what a buying climax, an AR, a secondary test, an M, a minor sign of weakness, right? A UT, and then a UTAD. When price failed to break that low, we ultimately had what? A reaccumulation. After that reaccumulation, right? So price should have been maintained by this, right? But the intention was pretty clear. When we reaccumulated, yes, we did trade into the open of this price action here. So, in reality, yes, we did mitigate. Okay. But when we ended up coming back down and coming into essentially the reaccumulation, at that point, what do I need to wait for? I just needed to wait for price to give me a cleaner setup. So we did create a new high, but ultimately all of this is just a large range. And if we pop up to the higher time frame, right? And we go back to prior to let's go like the 12 hour. The 12 hour is actually a pretty clean setup. So coming here, the key thing for me was, all right, well, what do we have, right? We have a clean distribution, right? You have your multiple drives, right? You have your 1, 2, 3 drives, and potentially even a UTAD, right? Um, and then what do we do? Well, we broke below, right? We had that break of structure. We exited the trading range. This was a major sign of weakness. Um, so if you get stuck in that tunnel vision and you're just looking at price action right here, whether it be on this 12, whether it be on like the 8 hour, whatever it is, yeah, you're seeing a distribution, but what really happened, right? Well, the first thing that happened is we came into our area of demand, right? And I've had this on my radar for a very long time. I actually, and I'll show you where I was looking, right? So when price comes down into this area here, I had my limit order, right? Now, why did I have a limit order? Essentially, this is the slingshot of the intraday, right? Why did I have my limit order there? Well, because when we come into these intraday and higher time frame points of interest, I always like to throw a little risk on. It wasn't a full risk, okay? Um, but the key area that I was really paying attention to was in this area here was simply here. Okay. So if we come back into this area and we go down in the 1 hour, okay, what we can see happening in here in this nice reaccumulation is simply this. All right. We can see one, we have ultimately we have a distribution, we have a creek, price accumulates down in here. And again, if you're not training your eye to see this, you're doing yourself a disservice, but we have a clean accumulation. Price does what? Makes a new high. So at this point, this is the area of demand that I'm looking for price to come into. And sure enough, what do? We come back in here, create an accumulation. All right. And then ultimately we made a new high. So this is the area that my eyes immediately were fixated on. This is something I've had screenshotted in my journal, waiting for price to come back into this area. And the area of confluence I was really looking at was this 1 hour candle. Now why that 1 hour candle? Well, we can't go lower time frame anymore because the price action's done. But if I come over here to my journal shot that I took back on May 19th, where I was looking was this is that 50% of that H1 candle. And inside of that, what we have is a clean type 2 accumulation, right? Into what? Into a distribution with a creek that turns into what? An accumulation, ultimately becoming a reaccumulation, right? A distribution into an accumulation with the jump of the creek typically is going to be your reaccumulation. And this 1 minute candle is by far the area that I'm looking at. Right now, why? Well, coming out of this type 2 schematic, what do we get? Ultimately, we get some sort of sign of strength. We know that this ultimately was the mitigation of here, and we clearly see that this was the mitigation of here. So as price starts to just mitigate out of positions, these sell to buy areas, this for me was the key. And where that 50% of the H1 and the 1 minute lie, clean and balance. So I've got one check there. I identified my institutional candle. It lines up with the 50% mark right there. I have confluence between not only the 1 minute and the 1 hour, but there was a lot of time frames in between that I was really looking at. So for me, this was a nice little 5 pip stop loss, risk right down to here, that I was willing to throw a small amount of equity at. right? On positions like this, I don't need to risk a lot of money. I don't need to risk a lot of my capital or equity. So when price, and again, if we come back in here, like this is that accumulation. If let me see if I can get 5 minute. Yeah. So here's that. Ultimately, you can see it. Here's that type 2 schematic, and here's that reaccumulation. This yellow right here is that 1 minute candle. Okay. It's the same 1 minute candle that is sitting right here. Okay. So for me, this is why I take a lot of screenshots. This is why I save a lot of information, and organization ultimately helped me, um, come to these conclusions because I had the information present, where, if I go right now, if I wanted to come down to the 1 minute, you're going to see, boom, data unavailable, right? We didn't have that. So, coming into, that price action, we clearly have, again, it's a 5.5 pip stop. Price came in here really nicely. It happened during London session. I was sound asleep when this happened. So I had the limit order set. And, coming into it, we did have a really nice little accumulation. If I come down to the 1 minute, yeah, there we go. We did have, a type 2 schematic into what? Another reaccumulation, right? Here is your trading range. Here's your 1, your 2, your 3 drives, right? This is your distribution. Distribution does what? Fails to make a new low. So coming out of that, we obviously pop, make a new high. Here's your creek. Again, jump of the creek and a break of structure or a new high, right? Equals nice old reaccumulation. So the market cycle is presenting itself pretty nicely in here. The intent was very clear. You know, the key thing in here, looking out of this reaccumulation, you had the redistribution that pushes into an accumulation. So market cycle coming down. That reaccumulation does what? When that UTAD or that up thrust, depending on how you're looking at it, when that move invalidates supply, gave pretty much all the indication, all right, potentially take a trade out of here. So I was actually potentially looking for a trade out of this area. It just just so happened that I was tied up with other positions and I couldn't take this trade. All right. But very, very nice clean trade. And when ultimately we were looking at this, some of the areas that I wanted to partial out at, we can see what we can see out of this distribution, right? The first area I want to see now is us to pop up above here. So, I used a really nice clean, quarter theory number and 80 level of 1.588. That's ultimately where I wanted to see us get into. Okay. And you can see, that was a really nice little play. I mean, coming out of this position where I risked again 5.5 pips. There you go. That would have been a cool little 1 to 48, right? 1 to 48. So, on a regular, let's just say you're trading a 100K account. And in this case here, I didn't do $250 risk. I did it 125 because I did it half of my normal risk on it. That still gave me a 6% profit just going to my first take profit area, right? It gave me, on a $125 risk, gave me a $6,020.83 profit. Now, in my case here, I closed out, closed out 25% of it because we were still technically bearish on the intraday. Okay. But really clean play. Now, where my next take partial area I was looking at, coming back into what was maintaining the intraday structure, I used again quarter theory number and half level of a 1.59500. So once we got up into this area here, I closed out, my second partials. All right. So, ultimately out of that, $6,000 that I would have potentially had at this point if I was trading a 100K account, I closed out 25%, you know. So out of that 25%, we're talking a pretty decent little payout. Okay. Securing those partials as we go along the way. All right. So, I took that 1.5% profit that I secured. And now my next target area is going to be up here at the 500 level. So when we got up there, and let's just see when we get up there. So, at that point, on July 8th, that's where she came in. Yeah, that's where it ultimately came up into, and again, so where I took my first partials, right? I secured, hold on, let me just write this out. So again, on a, let's see, partials, bam, there we go. All right, so partial secured, 25%. And what it was, in this case here on the 100K account, was $1,500 or 1.5% secured, right? So we secured, in this case here, right here. There we go. That's where we ultimately secured our first partials. Okay. And then on the second partials, all right, on the second partials, we secured, and let me just delete this real quick. So we have 93.75 in volume left. So at that case, in this case here, now I'm up, 5.7%, so I'm at, let's just say 57.39. Okay. And I'm going to take 25% off, right? 25% off is what I'm going to secure, which is another just under 1,500 bucks, right? Hold on. So I'm going to secure, another 25%, which is actually going to be 1.4%, right? Because it was like 14, if I do the math right, it's like $1,430 is what was secured here. Okay. And then from there, the key thing that I wanted to look at, and this is again something that you really want to pay attention to, is when we created this, why wouldn't I look at this as a UTAD, right? Well, one, we broke structure and we exited the trading range, right? Confirming a major sign of weakness, right? If this is our trading range, this is our major sign of weakness. This should have been respected. We should have distributed out of here and taken it lower. But instead, what did we do? We came into my buy area and then we broke the high. So when we broke that high, this for me is now a reaccumulation, like I've noted. Okay. More importantly, when we broke that high, when we created that UTAD, if you're going to call it a UTAD, what do? We just broke intraday structure. We've invalidated all of supply. And now my eyes are set immediately up to this area right here, right? This is where I'm looking here. All right. So we're looking at about an 800 pip move to get up there. Okay. Now, when we looked at this area, right, when we looked at this area here on the 1 hour, we know that now not only are we bullish on the intraday because of this, but we're bullish on this on the lower time frame as well. And this is now what's maintaining lower time frame structure because we've broken this high. Right. So in here, I've already said that we had that type 2 accumulation into the reaccumulation. And then here is another reaccumulation, which is the continuation move, which is the cause of this break of structure. So immediately, this was my slingshot. This was my extreme. These were the 2 points that I was specifically looking for price to come down into. So as price now, and I'm still holding 2 positions out of this order here, as price now comes down, what I want to see is I want to see price action give me a reason to buy out of that slingshot area. So as price comes down, and we'll kind of look as it comes down in here, really nice compression coming down. I really like how this is orderly. It's just walking itself down. Now, as price comes down, what I started to notice was this, okay? So we are in this area here, we are in prime real estate for me to start looking for buys, okay? Could we come lower into here? Absolutely, right? But right now, what I see is this, okay? I see a potential schematic. I see this as a terminal shakeout or a terminal spring. All right. So for me, it's pretty important to start paying attention to price. Obviously this is occurring during Asian session. So it's something I'm very cognizant of. But now what I want to see is this. Okay. So at this point here, this is where I started to focus. I'm like, all right, wait a minute. We have a schematic. We have a terminal shakeout. We have a reaccumulation that causes that break. Okay. And what I started to do, and I'll show you the screenshots here. What I started to do was I measured, right? So I measured, and I wasn't going to be taking an entry off of a limit order here. What I needed to see was price action, right? So I measured, and you can see right here, I measured from here down to here. And what I got was this was 50%, this was 80% of our terminal spring. So I knew pretty much that this was my box of focus. This is what I wanted to see price actually do. All right. Now, when price comes into this area, and immediately I'm already looking not only at the spring, but I'm looking that we are in the wheelhouse of my entry out of this 50% and 80% also is encompassing the reaccumulation to get me that break of structure out of this accumulation. Okay. Um, but that's something that I was definitely looking at. Okay. Now, as price comes into this area, this is where I start paying attention, right? This is where I start paying attention. So let's go lower time frame. We get down in here, and lo and behold, what do we see inside of our reaccumulation, right? Again, this was our reaccumulation right here. And price, if you see it right here, it gives us a beautiful, beautiful accumulation schematic, right? We get a really nice type 1 schematic in this price action. All right. So ultimately, what I was able to do was position myself during New York session. All right. And here it is. Okay. This was that position. So, we ultimately have a clearly defined trading range right in here. I can see I have 1 drive, 2 drives, 3 drives. And then ultimately, this entire thing is my spring. All right. I used the 5-minute candle. All right. 5-minute candle was the most voluminous candle, in my opinion. So I went off of the 50% of that candle. A lot of confluence that I found in that area, both in the lower time frames and then in the second time frame. Right. I mean, we come down to like the 15-second. Where I was potentially looking for my entry was pretty much right out of this area right here. All right. So 50% of that 15-second. And of course, my risk was still down to this area because we had this large area of imbalance. All right. But, in itself, very clean schematic, made a lot of sense. This was risk wise. This was, a 5 pip stop loss, 5 pip stop loss on a full risk, right? So on a 100K account, I could have put my full 1/4% risk. And now, price, the key is here waiting to see what price does. So I was, essentially what I was doing is as soon as we made this high, I reduced my risk to the bottom of this wick. All right. And I took that savings, the amount that I can see if, again, it was a 5 pip stop loss. So, trade management is a very important piece of my trading puzzle. So this was 2.6 pips. So immediately I was able to reduce the risk that I had in half. So where I had a $250 risk, I now had a $125 risk, which meant when price started to do this distribution, I was significantly looking for an entry based off of this last push here. And I was able to put a $125 risk on it because if price ends up stopping me out, I still only lose the $250. Okay. So essentially, what I was doing was just waiting for confirmation. So price came in, I had the limit order, and unfortunately, never got triggered out of here, right? My order limit was down in this area here. And what do? We make a new high. So on that jump of the creek and the break of a new high, we immediately confirmed what? We confirmed a reaccumulation. So market cycle is taken over here. We're starting to see bullish intent, bullish order flow coming out of the point of interest that I was really looking for, on that 1 hour, 4 hour time frame. So now what I really wanted to see was I wanted to see now that we have this reaccumulation, this area here is my main focus. Okay. Again, where I was looking, 6-minute candle was the most voluminous candle that I was looking at here in this push. It was also the 2-minute candle in here. And again, when you get into the lower time frame, you can see that this was the start of the sell to push down. This is where that 6-minute candle is. We have clear imbalance here on the 30-second, on the 1 minute, 15-second. So for me, it was a simple play, right? It was a simple play, stop, entry off that 50%, stop loss right down here. I believe it was like a 2.7. Hold on. what was it? It was, yeah, 2.7 pip stop loss. Now, because we have made a new high, this order is now at break even, which means I can put full risk of 1/4% or on a 100K account, $250 on here. Because if I get stopped out, the most I'm going to lose is that 250. Okay. So on this position here, again, this was a $250 risk. So now I have full volume and full, risk going on both of these positions. And ultimately, what I want to see is I want to see us take out this high, right? This high here is ultimately what is maintaining supply that gave us this push down. So as soon as we did that, that was going to be the key area that I wanted us to get up into. All right. You can see right here, this was the order that, the activation. And as soon as we pop up and make this high here, this order reduces my risk down to the bottom of this wick. All right. Price ends up coming down into the, essentially the area I was looking for a reentry. It just happened too late in the day. This was closer to almost 3 p.m. Eastern time. And for me, I'm done trading by that time. I'm not looking for an entry going into holdover. I'm really not interested in doing that. Not only that, but I believe this was Wednesday. And for most of you, Wednesdays is double swap day. So I know I was already going to get hit with double swap out of this position. And this position, I really didn't want to get a third position on double swap. So price comes down during New York session, mitigates perfectly out of this area. And then we make a new high. Let's get up to the 5-minute, really dive into this. There we go. So you can see, what do? We came perfectly into the area I was looking at, but it happened at 2:30 in the afternoon Eastern time, which again is not my trading time. There are sometimes occasions when I would get into a position there, but this wasn't one of them. All right. Now, where I was looking to partial out, right? I was looking to partial out once we make this high out here. So out of these two positions here, that's where I was looking at, right? And again, really close to that half level and quarter theory level of 1.58500. That's what I wanted to see, ultimately price get me to. All right. So bear with me here just a second. Cool. All right. So now I have full volume and I'm just waiting for that high to get taken. So we can see that we finally get that high taken right during, boom, right there. So right during Asian session. So now out of these two orders here, right, out of these two orders that were full volume, I closed out. We'll get up to this. Right there. Okay. So what I ended up doing was taking my partials, right at 1.50. There we go, right there. And right there. Bam. Okay. So, I was at a nice 1 to, like, we'll call it 12.5 with the spread, and a 1 to 16. All right. So what I was able to do, right, you can see I was up 3.2% on a 100K account here. So I was able to take that. I was able to take that, 30, what was it here? It was 32.43, right? And I was able to pocket 25%, which was just under 1% profit, right? It was $810. So, partials here, 25%. And I secured $810 or 0.8%, right? 0.8% on this order here. And now what that left me with on this position, right, was simply $187.50 in volume, right? The second order here, right? So first partials taken here, and then these partials here, this was at 41.85, right? So 41.85, which was, a 1% profit. All right. So secured just over $1,000 on it. It was 146 or 1.1%, right? So I took that again, this was at 187.50 worth of volume, and we're doing great. Okay. Of course, the next area that I'm going to be looking at for partialing purposes is what? I know that this area is my next area of supply. This is what tagged into this distribution and pushes in the low, right? So you can see I've got, right around the 158,900 area is where I was looking, right? That's ultimately what I wanted to see. What I did, wake up to, because this is now Asian session and we're coming into London session now, right? So during London session, what do we see? We see a really clean accumulation. We see that the London Open candle, right? London Open sweeps the Asian lows that were presented here. Really clean. I was looking for this position during New York session, but we never got it, right? Never got it. Price ends up now taking this high, and that position, these two positions that I was looking at here are now my second partial out area. I was looking at 58,900 was my take profit. There we go. So what I ended up doing here was securing the second partials, right? This was 4.2% now is what I'm holding, right? So, 42.62, I took the 25% off, which was now 1065, right? So another 1% is what I secured. All right. So 1% secured. Um, Again, I now had to take the volume, okay, that 0.25% volume off, which left me with, hold on, which left me with, um, bear with me. There you go, which left me with 90. Did I do the math right? Hold on. There we go. Okay. Which left me with, 140.62. Okay. 140.62 in volume. And of course, on this side here, I was up, just almost 6%. Okay. Almost 6%. So that 59.16 divided, or we'll just take off the 25%. So I secured a little over, so almost 1.5%. So it's 14.79 or 1.4% profit. Okay. And of course, now this was 140.62. There we go. All right. And what I was looking for again is I wanted to see us now come down back into this area here. Okay. This was going into now Friday. And Friday, what do we see? Friday, we can see the distribution starting to take hold. And where I specifically was looking for a potential entry, I'm sorry, this is Thursday here, where I started to look for a potential entry was Friday morning. We were looking at this and we can see what happens, right? So price is just really, really nice movement, right? We're getting that push to the upside where my next take partial areas for these orders was going to be when we took out this high here at 59.80. Okay. And what I wanted to see was how price was going to come into what is essentially maintaining lower time frame order flow, right? This low right here, this is just an order flow play. All right. But I'm not going to just set limits off of order flow plays. What I intended or ultimately looked at doing was taking it out of a schematic. So, and we'll see here in a second, during London into London crossover before New York Open, we get this right here. So I'll go 1 minute. I'll kind of show you what I was looking at. So again, what do we see? We see clearly, Asian session, London session open, right? So we have 1 drive, 2 drives, 3 drives, 4 drives, and then ultimately get what? Our spring, right? We get our spring, which takes out the Asian lows. All right. So immediately, this is the area I'm looking at. I wanted to take a limit order out of this. This is actually where about the time I woke up, right around like 6:30. We broke the high, and I was looking to take a position somewhere out of here. Unfortunately, we never got that, right? Price ends up doing what? Price ends up continuing, and you can see the clear distribution happening here. but it makes no sense for that distribution to happen. So instead, what do I look for? I look for what price just did here out of this reaccumulation. Distribution into a seconds time frame microaccumulation into a reaccumulation that causes that pop, right? So this is where I was really focusing. And what I liked was the 5-minute candle, right? 5-minute candle out of here. Now, this is something that I only threw an eighth or half of my normal risk on. But what I wanted to see price do was come back into that slingshot area, right? Especially after this reaccumulation. So for me, this was how I played it. Again, risk at the bottom of the slingshot area. Okay. It was relatively small risk, only an eighth of a percent. And you can see it was 3.8 pip stop. So immediately out of that, what I was looking to do was I wanted us to make this high, right? I wanted us to make that high so that I can what? Reduce my risk and get break even. So price ends up, there you go. At this point here, very clean. I'm at break even. We're starting to get towards, 11 o'clock in the morning Eastern time. And again, where was I partialing out? Well, I was going to take this position here up here to 59.80. Bam, right there. And this position here was going to get partialed out at 59.80 as well. And of course, I was looking for my first partials here at 59.80 as well, right? So ultimately, where we end up going, you can see we didn't really get up to the 59.80 level yet. I did end up taking partials though on this position, and where I took partials is once we made that new high, it was getting around 3 p.m. and I just closed out 25% of that position simply because, and I use right at 59.50 is where I took it, right there. I was sitting at a 1 to 13. All right, I was up about 1.6%. So all I really did was essentially it was just what I risked. Okay, so at a 1625, I took $406 of profit, right? So secured 25% right here. It was again $406 or a 0.4%. Okay, but all in all, where I'm looking, you can kind of see just the numbers percentage wise. I've secured 1, 2, 3. We'll call it 3.8. And we'll say about, with the 8 there, it's 4.6. So I'm up 4.6% already secured. And I'm sitting, right? I'm sitting, ultimately, if we bring this right back down, I am sitting at 5.4% in profit here. I am sitting at 9, so 5.4 of volume I'm holding, right? This one here is sitting at 9.1% volume. And again, I am holding at this level here. I'm holding, I didn't take this off, hold on. So this was 87.50. So I'm holding 1.1%, right? So all in all, I mean, I'm realistically, I'm up, just about, 16% is what I'm holding, plus what I've already secured. All right. So EA has been definitely just a banger of a setup. Obviously, what my intentions are to make this high, right? To take that high. And of course, don't forget that I have secured already 3% almost out of these positions that I'm holding from down here. And my next target area that I'm going to be looking for some partials out of this area is when we get up into this like 161 area over here. So, that position is being maintained. I've partialed out twice already. I'll be looking, hold on, let me delete that. I'll be looking again to ultimately get this high. And keep in mind that once we make that high, what I'll be looking at now is understanding that this is what maintains that lower time frame, and we could come all the way back. I can actually get broken out at even on some of these positions, but I'm okay with it because that'll just give me now a longer term setup. Because if we do something like this and then come down, that position is the one I can really hold to get to the upside. And I'm not really worried about securing these positions here because we could very easily continue from this push up into this area here before we see our major pullback. Okay. So that's why I'm holding what I have. Overall, this was just a really clean, very easy setup. Last week I took a total of, so I took, the two EA buys. I took that third one on Friday. I took an EN buy and two EJ buys, and that's normal. That's more honestly, that's a lot of setups that I normally don't take. I don't really get into a lot of those positions. I lost two of the EAs. I'm sorry, EJs. So a quarter percent risk on both. So, obviously I was down 0.5%, but between EA and then EN was just really phenomenal as well. I'm doing pretty well with them. Okay. So I'm not really concerned with looking for too much in the market other than playing what I have already in play and just letting it do its thing. Okay. Hopefully, this kind of broke it down for you. Hopefully, you understand why I took these positions. Again, nothing to do with lower time frame, right? Had everything to do with what was going on the intraday, what was going on the higher time frame, and understanding that this distribution was more of a distraction, I think, for newer traders. Um, Again, go back to May, go back to June, go back to a lot of these Zoom calls I've been doing where I've been massively bullish on EA just like I've been massively bullish on GA. All right. Um, and when you look at the actual intent, when you look at structure, when you look at who's in control between supply and demand, EA setups were just really, really, um, you know, they were misleading to newer traders, but they were very, very clear with the direction, with the intent, and how I was going to play it. All right. So I said I was going to upload this to everybody. I wanted everyone to, it's been a while since I did one of these. And, hopefully you guys learned something from it. Other than that, have a wonderful weekend and, see everybody in the chats. Have a good one.